I'm going to do several videos on revision activities to prepare you for your November exam. So today I'm going to start off with a past paper on partnership ledger accounts, partnership financial statements. Alright, the first thing you're asked to do is to state the double entry which would be made to record several entries. The first one here is the entry made when a partner is paid his monthly salary. Remember, during the year, whenever the partner takes a salary, then you're going to record that in his drawings account. The partner can't wait until the end of the year and then only take his salary. So everything the partner takes during the year, no matter what it's for, will go to his drawings. Now, because he's taking money, bank is an asset here which is decreasing, so we will credit it, and drawings increases on the debit side. It's negative, owner's equity. The second one is the adjustment entry made at the end of the year to bring a partner's salary into account. So in other words, now we're going to start to record what the partner was actually entitled to. The ledger account that you use to show what the partner earns is his current account. So you debit salary because it's an expense for the business, and you credit current account because you owe that money to the partner for his salary. The next one is the closing transfer entry for a partner's salary. When we're talking about closing transfer entries, we're talking about transferring all your income and expenses into one of your final accounts: trading account, profit and loss account, and in this case, appropriation account. When you close off an account, you're making the debit and credit equal. So if salary has a debit total, to make the debit and credit equal, you're going to credit the salary, and that goes on the expense side of the appropriation account, which you then debit. Okay, moving on. Calculate the amounts A to F in the current account, but in addition to that, also do the capital note in the financial statements. Okay, they give you some information. They give you balances for capital, so we're going to start with that. And they tell you that on the 1st of December, Peter had increased his capital, and this was recorded. If that increase has been recorded, it means that 210,000 there will include that extra 30,000. In other words, that is what he ended up with. So then you're going to work this way up to get to your opening balance. So if you added 30 to get to 210, you take 210 minus 30 to get to the 180,000, which you must have started off with. And then it says Pan had decreased his capital by 60,000, but this was not recorded. So in other words, this capital hasn't been decreased yet. So that will be the opening balance. You will decrease the capital here by 60,000 and work down to get to the 190,000. Okay, then we've got to fill in some missing information, some missing amounts rather, for these various things here, A to F. Okay, starting with A, that is the salary, and they tell you that Peter earns a monthly salary of 6,000 Rand, and he had not taken his February salary as he was on leave. No matter what they tell you, the amount that you record here is the amount that the partner should have earned. In other words, what he should have earned for 12 months. So when you're calculating A, you take the 6,000 times 12, even though he hasn't taken 1 month. So you're not going to times by 11 because you are recording what he actually earned here. Okay, then B is your interest on capital for B and for C. So what you're going to need to do there, the rate is 6%, and remember the date of the change there was on the 1st of December. So if you have a look at Peter to start with, Peter had 180,000 at the beginning of the year, and times by 6%, and he had that for the whole year. Then the 30,000 extra capital, also at 6%, you're going to times by 3 over 12, because it's for December, January, and February, and you add those amounts up. When you're doing Pan had 250,000 for the first 9 months of the year, because then remember he decreases capital. So for the last 3 months of the year, his capital would be 190,000. So you take the 190,000, you times for 6%, times 3/12. Okay, then D is simple, primary distribution. You take your salaries, your interest, and your bonus, and you total them. So you take whatever you've got for A plus B plus the bonus of 18,000 gives you 101,250. Okay, and then E is the share of remaining profit, your final division of profit. You need to look back at the top here, and they tell you how they share the profits in a ratio of 3:2, Peter is to Pan. So if the ratio is 3:2 and Pan gets 36,800, to work out Peter, you're going to divide this by 2 and times it by the amount that Pan gets, which is times 3. So you take the Pan's amount, divide it by 2, and to get Peter's, he gets 3/5, so you times by 3. When you come to this last one, when I was preparing for this video, I realized that I had made an error, but I can't change it now because this is done in handwriting. I didn't have time to type everything out. You're working out your final balance in your current account. So you asked here to work out F, and I forgot about this opening balance here. So that opening balance is in brackets. It means it's negative. It would have been a debit balance. So to get F, you're supposed to start with a negative 4,000. You're going to add the primary distribution plus the final distribution and then subtract his drawings. So this answer here should be 4,000 Rand lower than it actually is. It should be minus 4,000. Then you're going to add the salary, the interest, and minus the drawings. Alright, then the next question, explain why the opening balance of Peter in the current account was put in brackets. It's going to be a negative balance if he's taken more out of the business than he was entitled to. So in other words, his drawings must have exceeded his earnings last year because his opening balance is a negative. And then Peter was granted a bonus. Give 2 possible reasons for this. Perhaps he worked extra hours. He might have brought in new customers. It could have been his 13th check, his normal annual bonus, and so on. Okay, so that is partnership ledger accounts. I'm also going to do videos on all your other sections. These questions that I'm using here were taken from a final grade 11 paper which I set in 2024. So your videos are going to be 1 video lesson per question, and paper 1 is 4 questions, paper 2 is 4 questions, so in total then there should be 8 videos. Okay, until the next time, that's all.